Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, December 20th, 2023. So the markets got walloped today, and really they were kind of doing the same thing they've done for really the past 7 weeks, and that was drift higher. And the only catalyst that I found as far as news-wise is I know that the 20-year auction was really, really bad, and that's right about when the market started dropping. So probably leaning towards that. But there's a lot of other reasons, which I'm going to show you that I was wrong on this one, and again, I can't even blame it on our predictive analytics model because time-wise, we had a seasonality trade that was going to be higher into Christmas or into the end of the year. What we had, though, was from a technical view, once we remember we were getting long down here, and we had this big move up I covered, and then we started seeing these big bearish divergences, and this is where I started building the short position, and they were extended. So my trade that I was looking for, our last one was right at the 45.50, but the really what I was looking for was just a pullback to come down, close this gap, or even close this gap before heading higher. And never in my wildest dream did I expect that we were going to only get a 50-point drop. That was it, and we were going to go some 650 points higher. But we've seen that happen before, and really it's the same exact reason was, everybody's getting all excited because the Fed says they're going to cut rates. But the thing is, what nobody's really understanding is the rates, getting cut. Yeah, that's good to free up liquidity, but the problem is that typically they're not going to start lowering rates until we are in a recession. So everybody that's cheering, that the Fed's cutting rates 3 times, but the market's anticipating 6 times, they're really cheering for a recession, and that's where I was saying the fundamental end of it isn't going to come in. So the bulls were really burning, both ends of the candle here. And either one was going to come true. The Fed was really going to start lowering rates, but we were in a full-out recession, or the Fed is just going to hang out here and the economy kind of just struggles in stagflation. But in any case, that's one of the reasons why I've just been kind of sitting back on this one and saying, it's the euphoria is here. I don't really understand the whole rhyme and reason for it. But, it is what it is. And this, like I said, I did not expect this to come anywhere near where we hit today. I mean, where we hit as far as the high in a straight move. But, this is what it is. And so the 20-year hit, the S&P sent it down 70 points. But this is what I'm talking about as far as just the different say models or indicators that I look at as far as being extremely overbought. And this is outside of our the predictive analytics model, because we finally got a 96% sentiment reading when we were heading up to these levels here. So we finally got the sentiment that was up there, but we've had these bearish divergences on all time frames. But this is the chart this is one of them, and notice these lines right here. So this is the put call ratio. Whenever we've gotten down to this base right in this area here, we've seen a pretty good drop in the S&P. And this is the only one where it was we had a little drop, and then it went higher, and we saw the put call ratio get into just extreme overbought levels, and that led to I think it was close to a 10 or 15% decline in the S&P. So we're back down here. So again, this is the safety net part where I'm saying everybody's rushing to get to that top floor because Santa Claus is coming, but there's no way down once you're up there. There is no safety net, and there was no puts being bought, and that's why they were so cheap. And everybody was just looking higher, so this safety net was taken out. We know the VIX was down at levels where we saw bullish divergences on the weekly chart, and it was at very good support levels. And then we have this one that I've been showing you, stocks above the 50-day moving average. And every time we've come to these levels, we've had decent pullbacks in the S&P. And, just going by this and thinking just because the Fed is going to be, cutting rates 3 times, that any technicals or fundamentals or anything that you look at gets thrown away. That only gets thrown away when they were doing the quantitative easing, and that's basically because our economy was in the dumps. We weren't growing. I don't think we grew more than 2% on a year-over-year basis when Obama was in office for 8 years, and then finally when they started loosening everything up, and Trump took away a lot of the. I don't know what was in there, but whatever it was, the economy started picking up and doing very well, and then we had COVID that hit, and that sent everything into a spiral. But my point is that we're at levels right now that where everybody's thinking that it's going to be, this is just because the Fed's cutting rates by 3 times in 2024 supposedly, that's like quantitative easing, and it's the exact opposite. I mean, their quantitative easing was done when rates were at 0%, and they just kept throwing more in. So that's where I'm saying this euphoria over 3 rate cuts. I just was not really too sure why. Even the people on the street. I mean, they're a lot smarter than me, but you got to see where things are right now and where the Fed's projecting the economy is going to be next year, which they said they're projecting 1.4% GDP. So that's not good, and that's not something that you want to run into assets for. But in any case, it is what it is. But these, these 2 indicators that I just showed you, they cause anywhere from 5 to 10% pullbacks. And honestly, I would not be surprised. Yes, we have the seasonality is still in play, but we have tomorrow and Friday before we're here, and so maybe we get a little bit more. I'm not sure how they're going to work this particular drop right here. Obviously, this is what the bears have to get through. It's right around that 46.95. If they do, the next support level doesn't come in until 4600. So they're going to be really, it's just air here because they just bid everything up. Now, this is the next support level, say between that 4600 and the and right around that the 40 to 45.40. But below that, now we're dropping. This is what I'm saying. It's just stair step drops that go and now we're heading into the 44. So they did not build a lot of support levels, and that's the problem that I'm seeing if this continues down, which it really, as far as where we went from here to here, a bare minimum should be a move down to the 44.40. That's a 50% retracement. You can see the 38% retracement at 45.20. It has this support right here, and it's also 38%. So I would say bare minimum on this move, I would anticipate it that it's going to come somewhere down into the 4,500. Now, we probably will get some kind of bounce at the 45.88 and then, continue down. But this being a top, it could be, it's very hard to say right now, but just because of the way they've been bidding this market up. But we have sell signals on the 60-minute chart. We look on the daily, we have sell signals, very overbought. We look on the weekly, sell signals, very, extreme resistance up here. And if we look at the 15-minute charts, even when we were heading up, I'm sorry, that's the hourly. 15-minute charts, even when we were heading up, this was heading down. So there's sell signals everywhere. This is the support. I would say the resistance part is going to be, let me just hang on one second. So the resistance is going to be right around this. I would say, the bears, if they're going to want to continue this, I'm thinking they're going to have to keep price below the 47.40. If they lose that, obviously they have this resistance at 47.56. But my guess is they would come and take out these highs. So I'm not saying this thing is done yet, just because seasonality-wise, there's a few days left, but this is really the risk that I've been talking about, where you're just going to see the rug pulled out, and 70 points was removed, and it doesn't seem like a lot after a 600-point move, but when you do it in one day, and then if they do this again and we get another big down day, we're down to the 4,600 and lost a big piece of these gap ups from the Fed, dovish talk on that. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.